Welcome back, folks. This is Mark Montfort here from Not Centralized, and we are back for another episode of the FEX Insights podcast. This is episode 6. We're going to go through the news. We'll have a special guest on talking about ETFs, and then later on we'll do a deep dive into some of the hard truths when it comes to blockchain adoption, when it comes to enterprises. We'll see you for all of that inside this episode. First up, it's the news, and we're going to head over to the institutional and capital market space. With news of the Genius Act coming out there in terms of it passing, the US Senate did that a few weeks ago. They established the first federal licensing framework for stablecoin issuers, signaling a pivotal shift in crypto regulation. The White House was also supported with President Trump and officials like David Sachs, who you might have seen as a podcaster, and also he's had a storied career in private equity, that they voiced their strong support for swift approval of crypto legislation, indicating a favorable regulatory environment. For more on that, check out this article. Back over to Australia, and what we saw was one of the biggest deals in M&A this year so far. So it was the acquisition of Caleb & Brown, a crypto asset manager, by the exchange SwiftX. Brisbane-based SwiftX acquired Melbourne's Caleb & Brown that manages over $2 billion in digital assets to tap into the growing US market of high net worth crypto investors. You can see more on that in this article. The UK firms that embrace Bitcoin. Strategic Bitcoin holdings, at least 9 UK-listed companies, including Bluebird Mining Ventures and Panther Metals, have acquired Bitcoin to boost their share prices and attract investors, according to this FT.com article. This reflects a broader trend of integrating crypto into corporate strategies, much like what was used to be a MicroStrategy, which is now just called Strategy, doing the same thing, and others being fast followers. More on that in this article. Now over to infrastructure and tokenization news. Robinhood has developed further crypto initiatives. They're looking at tokenized stocks and a blockchain launch. They announced their plans to offer tokenized US stocks and ETFs to European users and to launch its own Layer 2 blockchain network, aiming to integrate digital assets into its platform. You can see more on that in this article here. Next in the news, it's Coinbase and their tokenization efforts. They're seeking SEC approval for offering tokenized stocks, aligning with a growing trend among many major platforms to transition equities onto blockchains. This means things like 24/7 trading, a lot more on-chain data, and just different types of market access that are available when it comes to listed as well as private companies that are able to offer tokenization of their shareholdings. So really interesting stuff. SEC approval is sought. You can read more on that in this article here. Back over to Australia, and we see the latest from FEX Insights. This is a deep dive into the mind of the product manager. You might recognize in here the host of this podcast. Yes, it was me. I was talking as part of the FEX Insights podcast to their head of product, Matt Hale. In it, we dived into the mind of what it's like to be a product manager in the Web3 space, what it was like before coming into the space, and the types of things that you need to think about that are a bit more nuanced when it comes to building blockchain technology, building for enterprise adoption, and just the types of things that may need to be myth-busted per se. You can see all of that in this 50-minute podcast here on the Red Belly Twitter. It's also available on LinkedIn and YouTube as well. Now over to market trends and fundraising. First of all, we had a surge in crypto fundraising. There were record inflows in June. It saw fundraising reach a 3-year high with $4.49 billion raised across 103 deals. This indicates a robust institutional level of interest and market revival. You can see more of that in this Coin360.com article. Now over to Bitcoin ETFs and their flows. They're experiencing much more inflows in terms of institutional adoption. Bitcoin ETFs witnessed significant net inflows in June, reversing previous outflows and highlighting renewed institutional confidence in crypto assets. For more on that, you can see this CCN article. Next, it's over to infrastructure and M&A activity. In this article here, you can see CoreWeave's acquisition in their talks with Core Scientific. It was a strategic move into crypto mining for CoreWeave as AI infrastructure provider. They are in acquisition talks with Bitcoin miner Core Scientific. This is an aim to integrate high-performance computing capabilities and expand into the crypto mining sector. So we talk a lot about the crossover between AI and blockchain. It's also at the infrastructure layer, and you can see more on that in this investors.com article. In this next section, we're going to go through a few blogs that are of interest from the last week. Firstly, it's over to Alpha Point and their Alpha Briefing for Institutional Insights. In terms of the overview, they analyze the SEC's recent decisions on staking-enabled crypto ETFs and their implications for institutional investors. The key takeaway was that despite halts on certain ETF proposals, the path remains open for the future staking integrations in institutional products. You can see their blog here. Next, we can see the Galaxy June market commentary. As you can see here, it's their June edition, and they highlight a couple of things with various different charts, so well worth checking out. Some of the highlights were that they discussed Bitcoin reaching all-time highs of 112K and Ethereum's surge due to the Pectra upgrade. This highlights the acceleration of institutional adoption and the impact of stablecoin legislation on market dynamics. Definitely one worth checking out. And then back over to the CCN market updates as well. In their June update, they highlighted that major institutional activities were around, especially including Circle's IPO and record Bitcoin ETF inflows. June marked a significant month for institutional engagement in the crypto space. And finally, we had the Red Belly Insights monthly update from June. This is over on their Medium page. You can see here that they summarize major news, including the Genius Act, Circle's IPO, as well as the SEC, showing FAQs and guidance on broker, dealer, and transfer agent rules in crypto asset securities. Well worth diving into, amongst other things that Red Belly is producing. That's it for the news this week, folks. We'll see you around next week. Now stay tuned for our special guests going into crypto ETFs, as well as the deep dive. Welcome back, folks, for another guest interview for the FEX Insights global podcast. And we're here with Grayson Mcleod from Monochrome. Grayson, thanks so much for joining us, mate.
Nah, thanks for having me.
I have been a fan of ETFs for a long time. As I was just saying, my background was former TradFi working at the ASX. And when I broke out and started my own kind of business, one of the tools that I created, just made it free for the public because the info was free, was something called ETF Tracker. We had a few of the crypto ETFs in there, and I was tracking CBOE stuff until such time as there was a cost to actually acquire the data, and I was just making this stuff for free. So unfortunately, I have only seen the growth of Monochrome stuff in the press and in the news, and you guys are doing an amazing job there. But before we dive into it, this is the first time I've met you. Could you give myself and the audience a bit of background about yourself?
Yeah, cool. So my name's Grayson. My role at Monochrome is the head of operations. So got a small team that we run all the day-to-day stuff, specifically around the ETF. So trade execution, settlement, NAV pricing, making sure the market makers are within their tolerance, and checking on the unit registry, the administrator. So more of like a holistic view of all the service providers that make it happen. My background is I actually went to uni for engineering, and by that time I was already just completely engulfed by Bitcoin. So just started the Trading and Investing Society there with a buddy, and all we really did was talk about Bitcoin. And 2017 met our CEO Jeff at uni at the same time, and he finished that year, and I stayed on at uni, and he went on to start an exchange, and over time asked for a job and started working with him, and that grew into leaving that company. And the idea was we're pretty hardcore Bitcoin believers, and back then the vision was this industry is going to take off, right? And there needs to be a proper, regulated, robust on-ramp for the institutions and the big players that we felt were coming. And what's the best product for that? Well, an ETF. Specifically in Australia, in 2022, I believe, ASIC introduced their crypto authorization, so we could have a a retail ETF, essentially with a license for Bitcoin. So that's what we did, and here we are.
Yeah, and as I mentioned, there's I've been tracking ETFs and seeing the growth of a lot of these ones globally, and seeing the first ones that finally we get these bits of news of like, okay, it's a crypto ETF, but it's not spot. It's a fund of funds, and
Yes.
Monochrome, you guys are definitely doing the spot kind of trading, and we'll get into the details and stuff there. But I think it's really important that people see the nuance, that they see a headline, oh, it's a Bitcoin ETF. Not all Bitcoin ETFs are the same. Could you give the viewers that may not have had that kind of nuance, what are the differences you see, and why is it important to know the distinction between the two?
Yeah, 100%. So it sounds like a bit of a paradox, but a spot Bitcoin holds physical Bitcoin. And what that means is that there is a wallet or a vault or a setup of wallets somewhere that actually holds the physical Bitcoin that backs that ETF. The other type of ETF is a futures ETF. So what they'll do is they'll, through some instrument, futures, track the price of Bitcoin more or less, and that's how the ETF kind of grows and ebbs and flows with the price of Bitcoin. In our case, essentially, it's just marked exactly per the price of the assets that we hold in cold storage. I think it's also worth noting that specifically in Australia, there are instances of what's known as a feeder fund, like you mentioned. Essentially, it's an ETF that buys units in another ETF, and what you have is a couple of layers of separation between the investor and the actual Bitcoin. In our case, because we hold the direct Bitcoin and we have the crypto authorization, there is no of this layering system, and it's a case of the unit holder is the beneficial owner of the underlying Bitcoin, which is very unique globally, and allows us to have some pretty unique features, which I'm sure we'll touch on in a bit. But in a nutshell, a spot ETF, as a rule of thumb, does tend to track better, just because it's a direct correlation between the underlying and the pricing. And also, you're holding physical Bitcoin. There's that actual real asset sitting there that's backing the fund.
It's interesting because you might see some labeled as like crypto ETFs, and yet when you look at the basket and through the stuff I did with ETF Tracker, one of the biggest features was people being able to compare the holdings. So I would scrape, the hundreds of different, and now it's still out there. It's ASX listed, but hundreds of different ASX listed ETFs, and you see the different holdings of ASX 200, of S&P 500, of NASDAQ, Europe, Asia, etc. Being able to compare the pair, because a lot of people just see the name, they might see the top holdings, they don't see all. They don't even know that there's crossover between the two. So holdings was always important for people apart from returns. But then similarly, like I think holdings, as you classify there, is really important, because you might think you're buying into crypto ETF, but actually what you're buying into is companies that are in the blockchain space. And yeah, they may track like there's a high correlation there between Bitcoin and whatnot, these other companies, but it's not exactly the same. And even then they have to rebalance, and that rebalancing takes time, as opposed to if you're directly holding it, you just get the exposure because of your direct holding. So I can see the logic in, being able to track far better. And I think that would be important, especially for institutional investors there. So I think that's a really good nuance to kind of highlight. I didn't realize that this is a unique thing globally. So how do you guys, are you tracking what's going on globally? Like how do you see like ETFs or crypto ETFs in particular?
Look, realistically, what we see is, our ETF, as a rule of thumb, tracks minus the management fee, which is 0.25%. The way we've built it is such that the benchmark of the fund, i.e., the mechanism of how it's priced. What we use is the CME CF benchmarks Bitcoin reference rate. That's actually a USD price. So what we did was, in the beginning, it was like, okay, how do we accurately price Bitcoin Aussie dollar? And it's like, you can't really go onto an exchange because all Australian exchanges, like, they're super illiquid. There's not really anyone trading there. There's not a lot of volume. So to get a BTC AUD price, you can't just grab that out of thin air. So what we did was we combined the two most liquid markets related to this, which was the Bitcoin USD market, and then at the same time, we combined that with a BTC AUD USD rate. And the beauty of this is, when we go to execute our trades, we're actually taking those benchmarks, executing them right at the same time, and therefore our execution methodology is the exact same as the benchmarking methodology. So what that means is, over time, if we're not having any deviance between the benchmark and the execution of the fund, combined with the low management fee, there's that over time, like, pristine tracking. And like, we've seen this with funds over the years, like Grayscale, for example. Like, if you had Grayscale since 2017, you would be priced at the same point now, or something along those lines. It might not be that case anymore, but the point is that if you are not careful and you invest in a product that doesn't track, then you're leaving a lot of performance on the table. So it's in the best interest of the investors to understand and make sure that they're buying products that actually do track the price of Bitcoin very closely.
Yeah, it's really interesting that you mentioned like the price there. Like, I remember with looking at the stats, typical prices could range anywhere between, like in Australia, for example, I'm just talking specifically about the ETFs here, anywhere between maybe as low as 0.2 and upwards of like 0.7% in terms of management fees. So 0.25, like it's very well priced. Like, and I think in terms of the fees, that's definitely the cheaper alternative, and yet you're offering also this better tracking and other benefits of, actually, like you said, people actually have ownership of that. Could we dive into that? Like, what is that? What are the benefits of that? Because some people might just think, oh, ETFs, I just want to track the price. Like, but to actually have the asset as being something that the ETF owner, connects with better. Like, what do you think that should, because people might not appreciate this fact. What would you say to that? Like, why is this a better thing for certain use cases?
So this is globally unique, what we have here. Essentially, because you, as the unit holder, have beneficial interest in the underlying Bitcoin, you can actually redeem that Bitcoin. This goes way back to when we were building the ETF, and we thought, okay, what are the features that we'd want to see as Bitcoin, as people that know where the industry is going? Like, what would we want? And the ability to actually redeem your Bitcoin was pretty much at the top of the list. So essentially, someone can go onto a brokerage like CommSec or NabTrade or whatever, put a large order with zero banking like blockages or rate limits or debanking risk. They can put these large orders in and then redeem that Bitcoin out the back. And that is super important, because it means that we're not just a Bitcoin tracking instrument. Like, it's an actual Bitcoin product. And also the inverse is technically true too. So we regularly facilitate Bitcoin applications, so we can actually take people's Bitcoin, unitize that, and have that Bitcoin sitting in cold storage with their units easily trackable on their CommSec or NabTrade or whatever. And people do this for a variety of reasons, whether it's estate planning. If you've got like a multi-sig setup and you're like deep in the trenches and something bad happens, in some cases family's not going to be able to figure that out. Other times it's just a diversification tactic. Like, if you've got a large amount of Bitcoin that you bought on an exchange 10 years ago and now it's worth a lot of money, maybe it's time to diversify that holding. Obviously, not any advice giving here, but these are just some of the cases that we see.
absolutely think that it's important to note all of that, especially like here in Australia, we've got a large what the globe would refer to as pension fund kind of system, like the pool of money from the millions of Australians out there. And yes, we're a tiny nation compared to many others that are our neighbors and globally. But because of the systems in place that require businesses to put, I think it's 11.5% right now, increasing to 12.5%, or maybe it already has increased this financial year. We are fourth largest in the world. We were number 3. We fell back to 4. We're projected to get to number 2 just because we're being mandated for employers to put more away for their employees. As part of that, some people don't just have it managed by the large asset managers, the superannuation or the pension funds, but they manage it themselves. And I've seen a lot of crypto businesses here in Australia start to look at SMSFs as a target market, because for estate family planning, property is getting more expensive, but something that is just like getting into the realm of property prices is crypto and Bitcoin. What do you have to say to the importance of these nuances that you've described? Let's say that you were addressing that like more not even just institutional, it might be the superannuation. I can imagine that there's going to be more like AMP that will eventually invest into this, but also the SMSFs that are actually doing that kind of stuff now. Like what kind of things do you think are important for them to consider?
Yeah, well, look, it's a good question because, I mean, I would say the majority of holders are actually SMSFs in our ETF. So there's a lot of nuance around it, and there's not a lot of firms that will really tell you how to do it. But like ultimately, you have to, and this is not advice, but what we've seen is there's a compliance aspect of holding Bitcoin in an SMSF that a lot of exchanges kind of skirt around. So technically, you have to have beneficial ownership of the Bitcoin, either in self-custody or in an ETF like ours, where you're the sole owner of that. On a lot of exchanges, it's actually more of an IOU. So if you read the T's and C's, you'll see that you, by depositing Bitcoin onto the platform, are not actually the beneficial owner of that anymore. And so that could be a non-compliance situation. So things like that. And I mean, ultimately, it also comes back to custody regulation. There is actually no regulation for crypto exchanges in Australia. A lot of them will have an AFSL, but if you actually look at it, it'll be for like money transmitting or something completely unrelated. And the only actual regulated crypto products are ETFs currently. There is obviously like an AusTrack registration for exchanges and stuff like that, but when it comes down to it, this is where it's at.
Yeah, that's certainly interesting, and we'll be seeing more evolution of that when it comes to Australia is trying to get government to clarify regulations, whether it is additional regulations to existing financial services licensing regimes or something even new. All of that is table stakes at the moment. But I think, people that are watching this, it's important to know the nuance. Looking forward, what are the big plans and stuff for you guys? Like, because Australia is great as a test bed, but I think it extends more globally than that, like given the innovations that you guys have created. Can you talk to us about any of the plans? Where are we going to see you guys over the next short to medium term, given the opportunities globally?
Yeah, look, I mean, given the uniqueness of our ETF and the ability for people to come in and out and maintain that beneficial holding, there's lots of things that we can do with that. I think in the Bitcoin space, what most people are really after is some type of lending product, and the ability for us to unitize Bitcoin, and then potentially people can then collateralize that like they would any equity. You lend against your Netflix shares. You can either borrow more Netflix shares or whatever. that's a big space because there's a lot of people out there that have these Bitcoin gains, and it's time to do something with it. And there are, like JPM came out and they've started lending against BlackRock's Bitcoin ETF, but the problem with these things is that they can't actually service the existing Bitcoin holder market because there's no way to put that Bitcoin into a BlackRock ETF unless you sell copper CGT event rebuy, and then in which case, like, what's the point of borrowing against it? So things like that, where we're actually in a unique position globally to start offering these types of products. Alongside that, we've got a pretty big effort going into Asia at the moment. The whole APAC region is pretty ripe for, other than the Australian ETFs, there's a couple of Hong Kong ones, but there's no real digital native going out there and making a push for it. So that's what we're doing at the moment. And other than that, structured products, so bespoke instruments built off the back of Bitcoin pricing. So starting to look at those and see where, in a portfolio, maybe someone has 2% left to allocate. They might be a bull, they might be a bear, they might have some kind of strategy where they think Bitcoin's going to be priced such a way that we can build a product for that investment thesis. So heaps going on, and ultimately we're just getting started. So it's very exciting.
I think it is, and I think this episode has been all about nuance, and we see a lot of that in the crypto space. Whether it's people coming at it from being very crypto native and not financial background, and seeing the evolution into the mainstream world of finance and what comes with that, especially with the sophistication and maturity and needing to understand that, it's not just like buying and holding something or trading stuff. There are these structured products, derivatives. There's the infrastructure that sits behind that. And there's even nuance when it comes to some of the systems. In previous episodes with guests and deep dives we've had for this show, it's been around the nuance of like some aggregators, like market aggregators, only looking and measuring things as valuable if they're completely on chain, which is great, but that's not how the real world works. And so there's others that, measure things differently. There's evolution there. My point is there's a lot of nuance. There's a lot of nuance when it comes to crypto ETFs, and you've definitely given us a good flavor of that. If people want to reach out to you, and we'll have to get you back on for another episode, but like if people want to learn more, reach out and whatnot, where's the best way to get to you?
Oh man, depends. People reach out all types of ways. I mean, Grayson JLM on Twitter or X. Don't scroll too far back because you'll see my crazy Bitcoin tweets from a long time ago. I still believe most of them. LinkedIn. Or you can always just go to our website at monochrome.au and hit the contact us button, and it'll probably be me or one of our other amazing peers on the end of the line. So always happy to talk about what we've done and also talk about Bitcoin. So
love it.
Yeah.
Mate, Grayson, thank you so much. Really nice to meet you, and we will talk again soon. Cheers.
100%. Thanks, mate.
Welcome back, folks, to the deep dive for episode 6 of the FEX Insights podcast. I'm here with my guest, Arturo.
Thank you for having me.
Thanks for following the schedule. The thing that we wanted to dive into today was something that is, now that we're seeing a lot more businesses and enterprises and even investors in the crypto space see that, crypto is going mainstream. We're seeing tokenized this, we're seeing stablecoin that. I think that they're used to the fast-paced nature of things, but yet don't realize just all of the different hurdles, hiccups, things that are business political in that sense that happen when it comes to just getting adoption. It's not just as straightforward as a business going, oh yeah, we want to do blockchain, then 6 months later it happens. I think there's a need to respect a little bit more of that there's a lot of traditional kind of systems. So I just wanted to dive into it. But just as a first kind of thought, when we started like working in this space, did you know from the work that you've done before in Web2, in trading and working in investment banking, just how long it takes to change systems? Did you have experience with that? I see a wry smile from you there.
I laugh because we talk to other solutions and software vendors that, actually one that we were talking to, they have 95% market share.
Oh, geez.
Where they play.
I think that's a monopoly.
Let's call it that. And even they have what they feel is difficulty when they're selling a new product, because they have to explain, why should you go through the change of implementing this new thing? What are the benefits? What are the costs of migration? And we're not even talking about blockchain, right? It's really, and we're not necessarily even talking about a new technology per se. It's just a new product or a new upgrade, a new thing that has already been vended in, right? And I think that to a certain extent, you can even see many institutions or bigger organizations, not only in finance, but also in healthcare, that don't use the most upgraded versions of Office or Windows or whatever it is, right? And that's not just the cost. Sure, costs matter. And well, actually, let's unpack it. It is a cost, but it's not just a cost for the license. It's a cost for changing their systems. It's people being educated, trained in the whole thing. So every change is a big change.
There's trade-offs with all of these different kind of changes, because it might be that some stuff is not backwards compliant, or that you need to do things in a new way. And yes, that comes with training, but what are the downstream effects of this one, what seemingly looks like a little change can affect many things in the downstream in terms of workflows. So I think that, like you said, it's just even in traditional systems, and yet we know blockchain, having worked in the space, just how massively upgraded it is in terms of the efficiency gains that you get for blockchain, not to solve everything, but certainly with payments and security, it can do a lot of things better with decentralized systems. And yet, if systems that are just a little bit better than what people have, and yet blockchain can be like massively better, if they're having trouble, what more when it comes to like blockchain itself? But the cost of change is like certainly a thing that you're touching on there that is a consideration. But even just before, there's also like what blockchain comes with that other systems don't come with, that I just thought of, is that there's the reputation. Like there's the reputational risk that maybe a few years ago, and even up to like this year, it wasn't okay to actually look at blockchain. It was considered like not a good thing, given all the news and negative stuff out there. What do you think about that?
I just think that businesses need to be, what's the term? They need to be less of zealots, let's say, when it comes to seeing the value of what they do, and also how they present themselves. I was talking to a friend a few days ago where we were saying, well, if we don't do this by this time, then it's going to be too late. And then that was an interesting question, because, or it was an interesting framing, because you think about, well, what does too late mean? In reality, too late is that the market has a perception of something, right? And there's a wave around that perception, and the wave goes up and then it goes down, right? But it's really just a perception. Because right now, stablecoins, for example, are very, very hot. Everybody's talking about them. If you're going to use a stablecoin, you obviously need to have a blockchain. So the term stablecoin and blockchain all of a sudden now have, let's call it marketing value or social value, in a way that perhaps a year ago it didn't, because it was dirty. That does not change at all the value of blockchain per se, right? The value and the connectivity that it brings you across different organizations.
In fact, it improved over time.
Yeah, correct. So I think that one needs to be very careful with making a distinction between what function you're actually solving, and making sure that your function is extremely pointed and that you have an end-to-end solution. that is not a set of Lego boxes, but an actual end-to-end solution that has been implemented. Because it's not only until you implement it where you understand the kinks of all the different pieces of that value chain. And there are many, right? Especially with something like blockchain, because blockchain is about connecting value chains.
Yeah,
right?
exactly. They wouldn't normally have been connected, for example.
So separate that from, well, right now, it's hard to talk about this topic, and this is the way that you kind of angle the narrative around your functionality. But that's, that's just marketing.
Yeah.
Right? Or it's not just, it's extremely valuable. Most people miss it, right?
Yeah. I think marketing is important as part of like the sales kind of process, because it's what opens up and gets the foot in the door. So if it's done well, it means that you are able to overcome some of those hurdles that may be seen because people only look at the news and media and just skim the surface headlines. There's nuance, and from what you're saying there's a lot of devil in the detail that's necessary to overcome. But even after the marketing thing and people are convinced and they want to take that next step, there's so many other things that we've seen that blockchain needed to do. One of those was that you can't have businesses all having to remember their 12-word seed phrases. That's just a lot of security risk that's out there. And I know it helps in terms of like how blockchain initially and crypto worked, but having what they call abstraction, making that easier, making it like, so we see guys like Infinex, the guys that were formerly synthetics, and now they're trying to build something, or they have built something that makes it easier to do things on chain. We see now, and I want to go into this topic, like this talk about, and you've mentioned it before, the need for blockchain tools to have API connectivity, because a lot of systems and tools out there, they need to use APIs. It's a way to programmatically connect different systems together. So you might have non-blockchain stuff that's connecting different software systems together, either getting data out or pushing information back into different systems. But what does that mean for blockchain?
There's a really interesting company out there that's been doing this for quite a while. Kaleido.
Oh, yeah.
Right?
Yep.
We know those guys, really good guys. And they offer a set of tools, open source tools, that allow you to run either an RPC node or an actual blockchain node. And then they have all of this different tooling that you basically deploy through a form of Docker container into your Azure environment, so that you can have visibility over transactions. You can connect your traditional systems through APIs into events that are captured by their tooling, right? So I mentioned this because it's good to know if you're actually going down the route of implementing blockchain in a cloud enterprise environment, then they're a really good solution for that. But also because it just comes to show that we're going to do blockchain. Well, what the hell does that mean, right? You'll have your own systems. Those systems then need to integrate, most likely need to be adapted to the way in which a blockchain flow should work, because you don't want to force the blockchain flow to adapt to your traditional flow, because traditional flows, for example, wouldn't have something like atomic settlement.
Yeah.
Right.
Yeah.
So then why use a blockchain?
Yeah.
Right. You have to adapt your traditional flow to actually benefit from the benefit of something like atomic settlement. You then have to integrate the blockchain connectivity. It's not only about the smart contracts, but also the way in which you engage with a smart contract. So then you have to have something like a Kaleido, for example.
Yeah.
Like there's so many different steps in that type of implementation that, it takes time, and it's not an easy thing to do.
It wouldn't have been easy before. I think maybe somewhat now it is helped because we've got AI tools that can speed up the smarts around any kind of knowledge process. So maybe they have never kind of done this before, but they need to map out how their workflows work and what each system does, and AI can help there. And then because we've got AI, it can help translate it into what are the things that are needed from the blockchain perspective. But it still takes time with all of this kind of stuff when we're not in a world yet, the world that we see in the future where everything is really well connected. But we certainly are going to dive deeper into more of these topics and just general enterprise adoption and even specific use cases, especially as when we see the RBA come out with their pilot projects and some other interesting stuff. What can you tell us about what you're looking forward to in terms of the next kind of deep dives when it comes to, we'll go through what the RBA pilots are. Anything else you want to add to that?
Yeah, look, that pilot is one of those where you rarely find a scenario where you can get excited. You can continue getting more and more excited almost as time passes, because you start to see how much can be done and needs to be done in order to execute on the change of what we think a tokenized market is going to look like, right? So one of the most difficult things when you're creating a value chain solution is to get everybody to sing Kumbaya, right?
Yeah.
That's really, really hard because everybody's either competing or they don't know the risks of sharing information and therefore they hold back, and it just becomes a shit show all over the place, right? Now people are actually collaborating really nicely. And when you start to see that collaboration, then you open up certain doors and you notice that, for example, communication between the two companies, either through traditional APIs or CSVs or reconciliation of events between companies on that value chain, that's a tricky process, right? And Gen AI with MCP, for example, opens up a lot of doors to simplify and streamline that process. So all of a sudden we see a completely new door opening of possibilities over using Gen AI technology, right? Then at the same time, we start to see that, okay, for example, if you're reconciling a number of different positions or events between two companies, usually you send CSV files through SFTP or something like that, and you start to see how clunky that process is.
Yeah.
Right? And all of a sudden you notice, well, we could actually use blockchain, or we should rather use blockchain, not only for the purposes of value transfer, but also for the purposes of keeping immutable records, right, on that shared ledger, and you could do so privately. And then you have two separate pieces of technology that allow you to communicate, but through this immutable ledger, right, or to audit communication through that layer. So all of a sudden we start to see that we're using, we're actually using Gen AI, we're using knowledge graphs, and we're using blockchain. All of these technologies that have existed for quite a while, Gen AI being the newer one, but nevertheless putting those things, all of them together, and being able to achieve that value chain execution, in incredible ways.
Absolutely. I think that tokenized kind of future is definitely something that is painted there as part of this RBA pilot that's coming up, as well as that feature of collaboration that you just don't often get with other kind of projects. So more on that in future episodes. Arturo, thank you for the deep dive.
Thank you.